Now, the next step, before I tell you about it, you need to know what you will probably already know. So I'm going to break it down as quickly as I possibly can, just what trends are. So this right here is bullish structure. That's an uptrend. That right there is a higher high. That is a higher low. We then have a push and create a higher high there. So that is a bullish leg. So it's pushed up. We then get a bearish pullback, and then we get a bullish leg like that. So that is a higher high. I'm going to show you examples of these on the charts. And then we have bearish structure, which is just the opposite. We get a bearish leg, a pullback, a bearish leg, and then that right there is a lower low, that is a lower high, and then that is a lower low right there. So you will need to know this structure right here, going on to the 4-hourly. So you probably already know this anyway. So onto the 4-hourly now, what you'll see is that price, when it came pushing down, when it was coming to the downside like that, I use this tool right here on my trading view. I use the circle tool, find it very helpful and clean. So when price tapped into 144, it created the high, then came down and created a lower low, then created that, and then came all the way down. So you can see that's bearish market structure. But then what happened? Well, we created that zone right there, still bearish structure, but the 4-hour, it actually tapped into what it created just there. So it's kind of a double bottom, if that's what you want to call it. I don't really call it that, but it tapped in and then it had a big push to the upside. And what it actually did was it broke above this zone right here, which was, as we were pushing down, that was a lower high. So because price pushed above there, we then created a higher high. So what we can call that is the first bullish leg of this uptrend that we're now expecting. So remember, on the daily, we're now expecting the push to the upside, and now the 4-hour has confirmed by pushing above the high that we are now entering bullish market structure. So we have that zone right there, and now all we're looking for is a higher low to be created somewhere around there, and then we can get that push from that higher low again to the upside. So the 4-hourly is very important because it gives us our bias. So knowing that we are now expecting upside, because we're in bullish structure, I've explained to you what bullish and bearish structure is. Because we're now in bullish structure, because we got that push, we can only look for buys. You cannot sell when we're in bullish structure. Just like when we were pushing down here, because we were in bearish structure, you cannot be buying. So if you're in bullish structure, you're buying. If you're in bearish structure, you're selling. There's no dipping in and out of each. That is the rule. That is what you have to do. You can only sell if it's bearish. You can only buy if it's bullish. So now you know this, keeping it nice and simple. Now you know this, you can head over to the lower time frames and actually implement your bias and know where to catch these moves from. Now, this is going to be different whether you're trading London or US. So I'm going to stay on Euro JPY for this London example and go over to a different example for US.